Berkshire Hathaway, today a towering multinational conglomerate holding company, traces its humble beginnings to the mid-19th century with the establishment of the Valley Falls Company in Rhode Island in 1839. Through a series of mergers, this company would evolve to become Berkshire Cotton Manufacturing Company in 1889, which merged with Hathaway Manufacturing in 1929 to form Berkshire Fine Spinning Associates. Initially part of the bustling textile industry, Berkshire Hathaway would undergo a remarkable transformation, particularly under the strategic direction of Warren Buffett starting in the 1960s. Warren Buffett's journey with Berkshire Hathaway began in 1962, when he started buying shares, recognizing the company as undervalued. By 1965, he had assumed control, a pivotal moment that marked the beginning of a new era for the company. At that time, the textile industry was in decline, struggling due to foreign competition and changing economic conditions. Recognizing the dire state of the textile business, Buffett made a decisive pivot away from manufacturing towards the insurance sector and other investments. This strategic shift commenced with the acquisition of National Indemnity Company in 1967. The entry into the insurance industry was not just a change in business focus, but a masterful move that provided Berkshire with a steady influx of capital. This capital became the foundation for Buffett's future investments, allowing him to capitalize on opportunities that aligned with his principles of value investing, seeking out companies with strong fundamentals and competent management. Over the decades that followed, Berkshire Hathaway's portfolio diversified remarkably. In the 1970s and 1980s, the company acquired stakes in various notable companies across different industries. This included investments in See's Candies, the Washington Post Company, and GEICO, each carefully selected for their intrinsic value and potential for growth. The approach was quintessentially Buffett, prudent, long-term, and always seeking value. In 1985, the Oracle of Omaha gave up on the original Berkshire business, and the last textile operations were shut down. The 1990s and 2000s saw Berkshire Hathaway scaling up its acquisitions, moving into larger investments and entire company purchases. Buffett's acquisition of significant stakes in major corporations like Coca-Cola in 1988 and American Express in early 1990s showcased his confidence in these companies' enduring value. Additionally, Berkshire made major strategic purchases such as the railroad giant BNSF, further diversifying its business interests into infrastructure and transport. Berkshire's acquisition strategy continued into the new millennium, with significant purchases like Precision Castparts in 2016 and major investments in technology firms like Apple. In 2024, Apple shares constituted about 40% of the entire Berkshire Hathaway portfolio. These moves underscored a gradual but noticeable shift in Berkshire's investment strategy, embracing technology and global brands while maintaining its core philosophy of value investing. Today, Berkshire Hathaway stands as a testament to the effectiveness of its unique business model, which operates with a remarkably lean headquarters staff in Omaha, Nebraska, and grants considerable autonomy to the management of its subsidiaries. The annual shareholder meetings presided over by Buffett have become an institution in themselves, known colloquially as the Woodstock for Capitalists. These meetings attract thousands of investors from around the globe, eager to gain insights from Buffett's vast experience in financial wisdom and investment strategy.